right. I think we're up and running. Hello, traders. Good afternoon. I think we've got everything programmed and running. Okay, let me just make sure things are operating the way we need to. My name is Daniel, by the way. I'm with VantagePoint AI, and welcome to today's live. We're going to be talking about a step-by-step guide to taming the market chaos. And we've got a couple of people that were already waiting in the room, so we're going to give everybody a chance to get logged in here. We have a scheduled 4 p.m. start time, so we're going to give everybody a chance to get logged in the room. I want to make sure from a technological standpoint, everything is working. You can see me okay, you can hear me okay. So from my side, it looks like everything is working the way it should. But can you just work your way over to the chat if you're in the room right now? And drop a line in the chat. Let me know you can hear me okay and see me all right, that my camera and my microphone are working as designed and planned. That's an important piece of this, I guess. All right. Look at you. Let me just pop something in the chat real quick. Drop a line in the chat. Let me know you can hear me okay and see me all right, that my camera and my microphone are working as designed and planned. Perfect. That's an important piece of this, I guess. Sounds great. Hey, we got Lane Mendelson in with us. Fantastic, Lane. Nice to see you, my friend. Lane's just a few offices away, the president of VantagePoint. Always nice when you're here in the session, so I want to say hi to you. And we're going to get started here in just 1 minute. Just 1 minute. Sounds great. Hey, we got Lane. Also, I just got word my daughter, who's off at college, is here watching as well. So, hello. Thank you for watching. Glad you're here. And my twin, nice to see you as well. Nice to hear that you're there watching. Glad you're part of this. We're going to get started here. It's 4 p.m. Eastern time, and I know we've got people starting to pile in the room as we speak, so we'll give them a chance to get in here and get things going. Again, if you are in this session and you want to understand how in a step-by-step way to tame the market chaos, you are in the right place. And I got to tell you, the market has certainly been chaotic. There is no doubt about chaos in the markets for a couple of weeks now. I know the markets were people were very strong and feeling very good about the markets. It was coming from a place of strength and greed, and now it's turned to a place of fear and uncertainty. Volatility is up. Geopolitical conversations are up. Peace talks, trade talks. There's so many things happening in the markets. As a trader, an individual trader focused on generating income, growing wealth, all of that stuff influences what happens to your positions, to your trades. And we're going to talk about some very, very key ways you as an individual trader can manage all that personally. Utilize tools and resources like artificial intelligence to put you in the right place at the right time to protect your capital and grow it. So if all of that stuff sounds good to you, then you are in the right place at the right time. If there's a little bit of background noise here, I apologize. Let me adjust the microphone slightly and see if you can still hear me okay, but maybe cut out that background noise. If it gets too soft, let me know that as well. I'm making some adjustments here live, all right? So if you're in the room and you can hear my voice and you can see my screen, jump into the chat right now. The best way for you to get the most out of this session is to get involved in the session. Obviously, I've got some things to talk about, but if you're here and you hear my voice and you have a certain question, or there's something specific you want to dig into, pop it in the chat. Pop it in the chat, and we'll make sure that as a group, we get the answers we came for today. All right. All right. I adjusted my sound a little bit, so hopefully it should be coming through okay to your speakers just fine, and everything is working the way we need to. How about we dive in? After all, you want a step-by-step guide. I've got a step-by-step guide. Let's work together to get that all accomplished here. So really quickly. Do me a favor. Go to the chat. Yeah, the audio went down a lot. Let me make another adjustment here. I'll make a little adjustment. I'm trying to cut out some of the background noise. There we go. I'll adjust it back up slightly. Thank you, Martha, for letting me know that's the case. How about now? You should be able to hear me okay. Michelle, I see you in the room. Mickfo, glad you're here as well. Okay, good. Good. I think we are cooking with gas now. Let me just double check. Is my sound better? Should be. It should be. If not, just let me know over in the chat and I will make adjustments. There we go, Martha. Thank you for that. I appreciate that. Send you a quick 100 to let you know I'm here. I'm listening. And this is a live session. For some of you that don't participate much in YouTube lives or haven't trained with me before, let me officially introduce myself. My name is Daniel. I'm Vice President here at VantagePoint, head of VantagePoint University, and my main goal is to help individual traders like you be more successful, be more confident when making trade decisions. And today we're going to focus on doing that with artificial intelligence. The markets have been crazy, and I want to give you some steps to handling this crazy market volatility. All right. First of all, go to the chat really quickly. If you could hear my voice, go to the chat really quickly and tell me if you agree with this statement that I'm about to make. All right? The statement that I want to make is every stock that you're trading in some way, shape, or form is influenced by what's happening here domestically in the United States as well as globally around the world. If you agree with that statement, whether you're watching this live or you're watching this recorded, just write the word agree into the chat really quickly. I want to make sure that if there's anybody, and you can disagree, you write disagree if you disagree, but I just want to make sure if there's anybody here in this session that has questions on whether or not you're trading in a global marketplace, that we address those questions first, because that's one of the things that I'm going to dig into today. And for those of you that don't know, this is pure education. I'm not here to provide trading advice. I'm not here to tell you what to do with your money. I'm here to educate you on ways that you can protect it and grow it better. So, all right, Hovis agrees, Wayne agrees, Justin agrees, Michelle agrees. This is great. Good. Again, if you can hear my voice and you agree with the fact that you are trading in a global marketplace and what happens in different parts of the world, what happens here domestically in the U.S. can influence your trades, can influence your positions, and just write the word agree, or something like that in the chat like everybody else has. Thank you, Rowena, agreed there as well. All right, good. And if you disagree, you can write that. That's okay. I'm okay with a little disagreement as long as we can have a good chat about it. The reason I'm asking that question is because the first step, when we talk about a step-by-step guide, the first step in calming and taming the market chaos, the first step is to use those global influencing factors to your advantage. Whether you're using artificial intelligence or not, let me give you a little golden nugget, I call it. And this is a little piece of information that can revolutionize your trading, is that there is no silo stock. There is no stock. There is no individual market that is just trading on its own fruition based on what's happening in the four walls of that company. That's not the case anymore. And everybody agreed with that, so I'm glad you agreed, but understand that there's also a way that you can use that to your advantage. Right? You can use that to your advantage in a couple of ways. If you're taking notes, write this down. One of the first ways is by doing sector analysis. Let me explain what I mean when I say sector analysis, right? If you look over here on my screen, I'm going to bring up the software really quickly. I'm going to put myself in the corner. We're looking at VantagePoint right here. This is the software that I rely on. I've relied on this software for almost 15 years now. For those of you that don't know, I've been involved in the markets for over 25 years, and all I do now is help traders understand how to navigate the markets and make better trade decisions. But if you're looking at my screen, you see a chart of Nokia, which we'll talk about here in a second. But more importantly, I want to guide you over to the left-hand side of my screen here where I'm going to open up my little sector layout. These sectors, now on my screen, there's 17 individual sectors, but what I'm showing you is that within each sector, there is a list of stocks. I'm going to pull up, here's transportation. If I open the transportation sector, you'll see that there are a ton of airlines in here, right? You know and I know that, number one, an airline's performance on the market is not just going to be based on whether or not that plane takes off and lands safely all the time, right? The entire sector can determine the trajectory of the performance of that stock. If Delta is up and Continental is up and Southwest Airlines is up, Alaska Airlines would likely be up as well. That's a way that you personally, one-on-one, can start to use sector rotation to your advantage so that you can put yourself in a better position. If you're holding a stock like, for instance, Delta or American Airlines, and you see a lot of the other airlines start to go down, well, you've got to start to protect your downside, in my opinion, right? You've got to protect your trade so you don't start eroding any profits you might have. And doing sector analysis can really, really help you do that. That's step one, right? Doing some sort of analysis so you can use those global influencing factors to your advantage. Now, what I do is I use Intermarket analysis. Does anybody here know if you're, as a matter of fact, I forgot to ask a question. Is there anybody in this session right now who is part of the VantagePoint family, who is doing Intermarket analysis already, who already has this artificial intelligence software and is doing some sort of Intermarket analysis? If you are part of the VantagePoint family, just say me or say, VantagePoint user or something like that. That's what we call our users, VantagePoint family members, because some of the questions I'm going to ask, if you already have the software, you're already doing this analysis, would be redundant for you, but still answer them. I just want to make sure I know who we have here in the room here live. Okay. Hey, Makefo. Okay, good. So you've got the VantagePoint software. So why I like using the VantagePoint software, for instance, is, you know what? I'm going to go to Southwest Airlines right now, and I'm going to show you the intermarket analysis I'm talking about. Now, remember, this is the first step in calming the market chaos, the volatility. And for those of you that might have missed it or didn't write it down, what I'm saying is do some sector analysis, do what we call intermarket analysis. And the intermarket analysis I'm doing here with the software is by using artificial intelligence, first of all, to figure out what is influencing, what is driving, what is affecting the price, in this case, Southwest Airlines. I'm going to go grab a pen really quickly so I can scribble on the screen. And if you've seen any of the lives in the past, you know that I like to do that. So hopefully it won't be too distracting to you, but here we go. In the middle of the screen, you should see Southwest Airlines. And I picked this one because I was talking about airlines. But what this is saying is that we're going to call this our target market. What we're doing here in the software, what I like to do is intermarket analysis, and I like to find which markets influence Southwest Airlines. The AI will do this automatically for me. Here is Alaska Air Group. Here is Delta. Of course, we would expect American Airlines to be in here. What this is saying is that the AI has gone out and scanned over 10,000 markets around the world to figure out what is influencing Southwest Airlines. Now, if you've got the software, you can do this already, but if you don't, you can do what I was just talking about by looking at the sector that stock is part of. In this case, Southwest is part of the transportation sector, and we know competitors and stocks that are similar to that will influence the price. It could drive Southwest Airlines up, could drive it sideways, could drive it down, and each one of these markets is going to drive, these could be really strong influencing factors where something like Campbell's Soup, the AI has figured out Campbell's Soup influences Southwest Airlines, but stop and think about that. Would you ever put those two together? Now, some people might say, well, maybe they serve soup on airlines. I don't know whether they do or they don't. I can tell you the last time I was on a flight, they did not serve me soup. But what the AI is saying is that there is some hidden pattern. There is some connection there. There is some influencing factor there. And if you know what is influencing or driving the price of a stock, then it's safe to say that you can use that information to then determine where that stock is expected to go. And that's what I'm talking about here with intermarket analysis. And the reason I'm showing you this is because you don't need the software to do intermarket analysis. You don't need the software to do sector analysis. But if you want to be able to do that kind of global market analysis at another level, at a level that is humanly impossible, well, then that's where artificial intelligence comes in. And that's why I use VantagePoint, because it's looking at all of these markets. General Mills is looking at Wix.com, or for instance, the Euro USD. It's figuring out which markets are influencing Southwest Airlines, the direction it's going to push it, and how much. Every single one of these is weighted by degree of impact. And I wanted to start here because I'm not here to sell you software or to get you to use VantagePoint. That's not what I'm here to do. What I'm here to do is give you the first step that is essential to you being more successful in volatility, in chaotic markets like we're in right now. And that is doing some sort of sector analysis, global analysis, or analysis on the influencing factors of what you're trying to trade. In this case, we're talking Southwest Airlines. Right? It doesn't cost you anything to do that. You just got to have the time. You got to know where to look, and you got to have some sort of tools to be able to do it. Right? Personally, I use VantagePoint for that. So let me just stop there really quickly and check the chat, make sure I didn't miss any questions. As I said, this is live, and I love for you to get involved. And if there's a question in the chat, or you've got a question now, I'll give you a chance to put it in. I see a lot of good comments. Hey, Sharon, nice to see you. Yeah, I see you in here. That's good. Abel, I see you in here as well. Wild Bill, VantagePoint user. That's fantastic. So we got several users in here. If you've got a question around doing sector analysis or doing intermarket analysis, let me know. Happy to answer those questions. And as far as the software goes, I can tell you what I just explained to you and what this analysis is, what it's doing. It's patented. There's nobody else in the world doing this, and that's why I utilize VantagePoint to do it. So whether we're talking about Southwest Airlines or we're talking about, in this case, Nokia, there are driving factors. If I go to the market details here for Nokia, you'll see There's a completely different set. There's no airlines. As a matter of fact, there's ConocoPhillips, there's GameStop, there's Sprouts driving and influencing the price of Nokia, as well as several ETFs like the S&P Retail Spider. Like there's so many things here that for me to figure out what is influencing Nokia is humanly impossible. But personally, taking a trade or looking at a position without doing some analysis like this, whether it's a chaotic market we're in right now or a trendy market, eliminating this from my analysis is just, in my opinion, reckless. And I don't know about you, I'm not willing to be reckless with my money. So think about that. See if that's one of the things you can pull to your analysis so that you can account for the chaos that's going on, the volatility that's going on, all right? All right, good. So that's step one. Step two is then, all right, so I've done that analysis. What do I do with it, right? Anybody ever have that question where it's like I do some analysis, I come up with a conclusion, I come up with a hypothesis, now I got to test that hypothesis and make some decisions. And maybe you're not looking at it scientifically like that, you're just saying, okay, well, what do I do from a trading standpoint? Well, that's the next step. The next step is using that analysis to make some directional decisions about the trend. Is that trend expected to go up? Is that trend expected to go down? And my suggestion, again, this isn't trading advice, but my suggestion is to do your analysis and then make a decision and stick to it. And the first piece of analysis I'm going to do after I do that intermarket analysis is determine the direction that that trend is expected to go. How do I do that? Well, here at VantagePoint, I do it with advanced technical indicators that are predictive. So if you look at the screen, you'll see that there's a blue line in the middle of the screen with a gray line. And by the way, if you're a VantagePoint user, I know this might be a little bit of a review, might be basic, but I always like to start here. Because if you are going to find a way to manage volatility in the kind of markets we're in, you gotta have the right tools and then you gotta know how to use them. So I wanna start at the basics. We'll get a little bit more advanced as the live goes on. All right, we're only 15 minutes in. But the first thing that I wanna do is figure out what's going on from a trend standpoint. So here on the screen, this blue line that I'm pointing to, this is called a predicted moving average. And the reason it's called a predicted moving average is because we've taken that intermarket analysis, then we've created a predicted price for the next 1, 2, and 3 days. And then we've taken that predicted price and added it to the formula of a simple moving average to completely transform it from a lagging indicator to a leading indicator. Well, let me show you how to read it, because this is going to be one of the primary things, one of the primary pieces of analysis that you're going to do to determine the direction and the timing of a new trend. When that blue line is pointed up, that's a bullish indication or trend expected to go up. And when that blue line is pointed down, that is a bearish indication that that trend is expected to go down over the next few days. The key point is when I can see that that blue line was below and then went above that gray line and there's some green shaded right in between those lines. You can see it went from red shaded to green shaded. This is the spot on the chart where I know the AI has said, hey, I've done enough analysis and this trend is expected now to switch from going down to going up. Right? This is a trend reversal on the horizon over the next few days. The first thing that I do when I see that is verify that I've got confirmation in the strength of that trend and the strength of that price. So the blue line crossed above. I need to make sure that the shaded area below it that is red or green, this is called the predicted neural index. If you've got the software, you know that. If you don't, let me explain to you what this is doing. This is actually analyzing predicted price and comparing it to past price and telling me which is going to be stronger. If predicted price is stronger than past price, I'll get a little green box. If it's weaker, I'll get a little red box. What I want is I want to make sure that I got both the blue line above and a green box agreeing. If I've got both of those conditions, and this is the AI saying, hey, this trend is expected to go higher, and there's some short-term strength in that trend. And then I want to take it a step further. Anybody here use momentum? If do me a favor, go to the chat really quickly and tell me whether or not you use momentum to make any trade decisions today. I'm going to get a drink of water while you do that, but I want to understand from your trade perspective, whether you're new, whether you're experienced or super experienced, is momentum part of the analysis that you're doing to make your trade decisions? If it is, then just write I use momentum right in the chat really quickly so that I know that we've got some momentum traders in here. This is a live, so I do a lot of talking. I appreciate you giving me a chance to get a drink of water here. Just checking the chat to see if we've got any momentum traders, and so far, based on what I'm seeing from a momentum standpoint, we don't have any checking in just yet. And I know there was hundreds of people that were signed up for this. Hey, Miss Philly, yep. She uses momentum. I appreciate that. Okay, good. Anybody else using momentum to make your trade decisions in some way, shape, or form? Yeah, bro, okay. Hello, hello. Yep, for trades, momentum's important to you. Okay, good. That's all right. Better late than never, right, bro? At least you're here. All right, the reason I'm asking that question, because if I've got bullish strength expected and that trend is expected to go up, and both of those in our agreement, what can make a trend accelerate faster than almost anything besides a quick news story? Momentum, building momentum. Well, if at this point right here, I've got a trend agreeing with strength, then what I would want to see is momentum building leading into that to say, yeah, not only is this a trend reversal, but it has a head of steam behind it, right? Think about a train from a momentum standpoint. A train just doesn't stop when it hits the brake. I guess you don't hit the brake in a train. You pull the is that how you stop a train, right? You pull the chain. But you get my point is momentum will make that train carry forward, right? Until it finally comes to a stop. Well, what I want in a new bullish trend is I want momentum building from bearish momentum to bullish momentum before that crossover happens, because if I have that, that means the market conditions are bullish. Not only is it the right time, but the conditions are bullish for a nice move. So stop and think about that for a second. If you're looking at this chart and you're seeing that the trend is expected to move higher, there's bullishness expected from strength, and momentum was building in the weeks before that, then I've got everything I need to say that this trend is officially expected to reverse from bearish to bullish, right? And I know this might seem simple, and if it seems simple to you and you're not already a VantagePoint user, then you got to think about that, because what's going into all of these predictive indicators is that global intermarket analysis. See, we hold 2 patents on this technology, and again, I'm not going to get into the details on the patents, but one of them is transforming lagging indicators into leading indicators that can predict the trend direction, all right? Once that trend reversal is expected, all I've got to do and all I need to do is watch that blue line. And as if that blue line never crosses below that gray line, or that shaded area never turns red, like you can see it was red back here. If it never turns red, that is the AI saying, hey, this trend is expected to continue higher. There's going to be times where there's weakness in the trend. There's going to be down days in the trend. There's going to be times where momentum is starting to shift. Well, that's good and fine, and it's nice to know that those conditions are a little rocky, but remember what I said earlier is that that blue line is the first thing that I want to analyze. You want to tame some market volatility? Global market analysis will help you do that, but indicators that are taking that global market analysis into consideration before they're drawn on the chart will really tame that volatility. There's been major volatility. As a matter of fact, last week, what was it, Friday? There was we saw 900 points peel off of the markets on Friday very, very quickly, like 2.5%, like that. Well, did that affect Nokia? Did that affect this stock? Think about that. That was here at the end of the chart. Well, when this stock started going higher, when it was forecasted to go up, and we had that confirmation, it was about $4.14, right? Now where it's at is what, $5.70. I'm just going to draw a quick profit example here so that you can see somebody trading at $4. Let's say you had 1,000 shares, you put $4,000 into that. Just in one trade, you're up 36%. In this hypothetical example, over 46 trading days. That's more than 0.5% a day, right? And here's the best part about it. Friday's craziness did not affect the gains on this more than anything else might have affected it. The market crumbled, fell 2.5% in one day, and Nokia just kept on charging. As a matter of fact, since then, look at this. Just in the last couple of days, just this week, Nokia is up, almost 6% in 2 days. That's using global market analysis to your advantage, not only to find a new opportunity, but to have the confidence to ride that trend all the way to fruition. At this point, if something happens to Nokia and you exit that position, you had a substantial move to the upside, and you made money. And that's the whole point of trading, right? Now, some of the questions I get are about what if the market does fall? Let me show you something. If you look on the right-hand side of the chart, there's this little candle. It's a gray candle with a green top and a green bottom. Everybody should be able to see that okay. That is the next day's predicted high and low. So at 6:30 p.m. last night, this updated and said, you know what? If Nokia falls below this, it's unexpected to the artificial intelligence. If it falls below the predicted low, let's see, of around 554, if it falls below that, then you've got to think about protecting your downside, minimizing your risk. You could set a stop loss below that, maybe at the low of the last 72 hours. You could use whatever measure your trade plan calls for by using that 554 and saying, you know what, if it falls too far below 554, then I've got to really think about managing that position. If it doesn't, then I can continue riding this trend. See, all of these predictive tools combined give you the ability to calm the volatility, not be overly emotional about position you might be in, and not be too concerned about what's going on around the world, knowing that the artificial intelligence is going to do and take that analysis into consideration. And again, even if you're not using VantagePoint and you don't have VantagePoint, it's okay. My suggestion is do some sector analysis, do some overall stock market analysis, and make your decisions off of that, all right? And by the way, this is a stock I think most people know about, Nokia. It's a very inexpensive stock, but it has some really, really good movement. Even if I put some volume on this, you can see, I'm going to just pop volume onto this chart so that you can see, 65 million shares traded yesterday. Plenty of liquidity, plenty of volatility, plenty of action to make a lot of money. Here's another one, CleanSpark. This is a stock a lot of people are talking about. You know, I've had a lot of people ask me about CleanSpark. You know, again, by the way, just in case you're wondering, you don't have to overthink things. You use a simple process that is wash, rinse, repeat. I don't care the asset I'm looking at. I don't care the equity or the stock. I could be a stock option trader, and I know options inside and out. And I can tell you that if I apply a systematic approach to my analysis, I'm going to be better than if I apply an emotional approach, or if I'm just looking for news stories and trying to trade off of what people are talking about. A systematic approach like this. Ready? First of all, do the intermarket analysis. Do the analysis on that individual stock. The AI in this case is doing it for me, and I'll show you here. I'm going to just right click on this and go into the market details and pop the hood on this thing. It's looking at Pan Am Silver, it's looking at Fortuna Silver Mines, Premier, Arc Innovation, Hut 8 Mining. In order for CleanSpark to move, these assets like Baidu.com are driving the price of CleanSpark. I don't have to go figure it out because, let's face it, I'm using VantagePoint's artificial intelligence to do it. But it's a main part of the analysis I'm doing. Remember, systematic approach, wash, rinse, repeat. So I know the AI is doing that analysis, and the first thing I'm looking for after that is the crossover. Once I've got the crossover, I can see the blue line was below and now it's above. The next step is look down. Is the neural index green or red? Is there strength predicted or weakness predicted, right? So step one, crossover is there. Clear, I see it. Maybe I'm on the wrong day, but you get my point. It's crossed. I look down, I see the neural index is green. They're both in agreement and bullishness. I look down here and I say, did I have momentum building going into that day? Here's the thing. Here's the thing about market conditions, in case you're wondering. Market conditions make it so that the environment for a bullish trend is supported. There's a difference between using timing indicators and market condition readings. Momentum is a market condition reading, where the trend predictor and the strength predictor are about timing. So right here on this day, I got the timing indication to say, hey, 9-9, CleanSpark was bearish and now it's bullish, and there was momentum building going into that day. That's an opportunity to get into a position. For you options traders, you're going to love this. You're going to love this, because if I know CleanSpark has options, and what I can do is set my expiration out 30 to 60 days, right? If I set my expiration out 30 to 45 days, 30 to 60 days, depends on you. That means I'm going to give that trend enough time to mature, because I can always exit that position early. If I'm setting an expiration out 30 to 50 days or 30 to 45 days, I'm only expecting to hold it for a couple of weeks. By the way, that is a little options trading hack. Some of you probably know it, but if you don't hold your trade all the way up to expiration from an options standpoint, if you're buying options, you're going to reduce the impact on time decay. And I know people say all the time, Daniel, well, if I reduce the impact on time decay, I don't take advantage of that big price move that can happen right before expiration. That's on you. If you're risky and you're not as conservative as I am, then that's something you want to do. Great, do that. But I'd rather not have time decay erode my gains. So personally, if I'm setting expiration out 30 to 45 days, then I'm only expecting to hold that thing 15 to 20 days, right? So that I can exit that before time decay really has a chance to hurt me too much. Well, what about strike price? Well, you can see I've got from at that point, we've got a strike price either around the 10, the 950, depending on what's available to me and how much premium I want to pay. I know I can set my expiration out 30 days. I can get an at the money or just out of the money strike. And as long as that blue line stays above that gray line and that shaded area is green, I can ride that trend. Let's say that was the case. Let's say you were a VantagePoint user, you found this in the scan, and you were riding that trend until the close yesterday. The underlying asset is up 128% in 25 trade days. Is that going to happen every time? No, it's not. Let's be real. 100% move on the underlying asset is a grand slam. But 100% move on an option is like a 500% gain. So no matter how you slice it, identifying a trend by using intermarket analysis calms the volatility for me, right? Using predictive indicators to draw a conclusion around what's expected to happen, not what has happened, gives me the information that I need to make a very, very valuable trading decision. And then I get to manage that position using the AI. That puts me in a place where I don't have to be overly emotional about what's going on in the markets or in the trends, and I can take advantage of some monster moves like this. If you're seeing this and you're realizing that this is something that you can do, and you're not a VantagePoint user, or even if you are, and you're liking this education and this information, do me a favor, go into the chat and let me know that this is working for you, because one of the things that we do here at VantagePoint is education, right? Sure, we have a software that nobody in the world has and is doing artificial intelligence analysis that is humanly impossible. But if you don't know how to use it, or you don't know how to interpret the markets, or you're not doing any market analysis like this, then it's no good. So if this information, this education is helping you, do me a favor and just go to the chat and let me know that's the case, because I know our team here at VantagePoint works very hard to put a lot of this stuff together, and I'd love to share with them that that's something that makes sense for you. How about shorts now? Good question. Good question. Hey, Martha, thank you for that. I love that. I love your answer, and I agree. Hey, Chucky, Dave, let me see. Agree. Okay, good. So we're on the same page. Doing analysis like this can be helpful, and you're understanding what I'm going over. The question of what about shorts now? What about shorts now? Are you seeing any indication where now is an opportunity to shorts? Or are you just thinking because of the major sell-off on Friday that it's time to short the markets? Because what I'm doing is using artificial intelligence to make those decisions. If you're looking to short the market or buy some puts, are there opportunities to do that? Absolutely. Can I use AI to find them? Absolutely. All right. Somebody said AMD. Well, if there's a ticker you want to look at, we'll see if we can find some time at the end to go through some tickers. We'll take a look. But let's see. RGTI. Is that a stock? Let me see. RGTI. It may not be something. RGTI. Rigetti Computing. AMD. All right. So people are putting some tickers in here. Let me just fire those tickers up and see what we got. AMD. George, I got you. Don't worry. Here's RGTI and AMD. Let's zoom in on these bad boys and do the same kind of analysis we just did. Here's RGTI. I'm zooming in on this so you can see. Look at it. Where's that crossover? I'm trying to find it here. All right. Here we go. There it is. All right. So here's the crossover. Here's the neural index. Here's the momentum building. So that bullish trend was identified very well. Who's this for? Abel? All right, RGTI, here's your stock you were talking about. Take a look at the right-hand side, because this trend has been trending now for quite some time, and your question is this something that I should be thinking about shorting? Well, it's up 243.27% since VantagePoint forecasted this, and I tell you what, Abel, thank you for bringing this to the table, because your question of, is it time to short it? Well, let's do the analysis on the right-hand side of the chart, all right? And people always say, Daniel, don't look at the left, look at the right. Fine. Let's look at the right-hand side of the chart and do some analysis here. Is the blue line above or below the gray line? Is that shaded area green or red? It's green. Is the neural index green or red? It's green. right? Is momentum increasing? Are we getting higher lows or lower highs? Well, let's analyze these momentum indicators one by one, right? Higher low, higher low. Ooh, boy, that's kind of even there. So we're starting to see momentum weakening. I can tell you, based on the artificial intelligence, the AI is not saying time to short. Now the question is it time to take profit, right? A $19,000 hypothetical gain trading 500 shares of a stock that was, what, 15 bucks a share at the beginning? Let's find out. $17. Okay, let's see. $17 times 500 shares. That's an $8,500 position. That $8,500 position could have made $19,000 in 33 trading days with an $8,500 position. I don't know if you've taken those kind of positions, but I can tell you that is astronomical. So thank you for bringing it, Abel. But look at the right-hand side of the chart. This is not a shorting opportunity setup. Could it be a profit-taking setup? Well, let's look. The predicted low for today's trade day was 53.44. If this stock, for some reason, drops below 53.44, then you've got to think about locking in these gains. Remember, I said set a stop loss, in my opinion, below that predicted low. You could use the low of the last 72 hours, either there or there, and lock in the, let's say this stock, and it may have today, I don't know because you brought it to the table, so you'd have to tell me. If this stock dropped below 48.87, well then guess what? I can lock, or 49 bucks, let's use a round number. I can lock in those gains, and that's a 200% gain. But it is not indicating that there's a bearish opportunity. So to answer your question, the AI is not saying anything to me about shorting this. It's saying if it goes below 49, think about locking in your gains at a 200% hypothetical gain, but wait for the predictive indicators and the intermarket analysis to tell you that this thing's expected to start going down. And for me, look, over the last 15 years, I've helped a lot of traders accomplish their goals in the markets doing that kind of analysis. And right now, RGTI may be a profit-taking opportunity, but certainly I'm waiting for the AI to tell me that there's a potential shorting opportunity. And we're not there yet, my friend. Hopefully that was helpful. Who asked for AMD? Let me look. Somebody, just check in the chat. Was that you, George? Yep, it was George asking for AMD. Here's AMD. AMD, again, another stock that had a crossover. Look at this on the left-hand side of the chart. It was red, and then it was green. Here's a crossover point. The neural index agreed. Momentum was increasing going into that day. We had a perfect setup, George, for a bullish trend on 9/15. Do you see that? I know I'm going kind of fast, but we've done it a couple of times, right? So hopefully you've got the wash, rinse, repeat method down. Crossover, neural index, momentum, or we call these predictive differences, rising going into that day. If you've got that, then you've got a bullish projection happening. As long as that blue line stays above that gray line, then we could ride that trend. Even if it comes down and rides it and touches it, that's okay. That's all right, right? When we're talking about a predicted moving average, I like to make the joke that PDA is okay. You guys remember PDA, right? Public displays of affection. That's okay. If the blue line comes down and touches the gray line, fine. I'm looking for a total crossover where the shaded area goes from green to red for a trend reversal expectation. Right now, AMD from that forecast is up 48%. Oh, sorry. Abel just put in a note. I use VantagePoint. I didn't take advantage of the VP and made some good profits from the move on the gap up. There you go. All right, good. Thank you for saying that, because VantagePoint identified a bullish trend prior to the gap up, right? Everybody's used to seeing these earning gap ups and things like that, right? When you stop and you think about that, it's like that was 2 weeks after, maybe 3 weeks after that forecast was up. But absolutely, in position to profit before it gaps up. That's powerful. But more importantly, what about now, right? You're riding that AMD trend up, right? Let's say you ride that trend up. You're up 48%. What do I do now? Well, VantagePoint said AMD's potential trading range for the day could go as high as 242.75 and potentially as low as what did I say? Is it 75? 242.57. It could go as low as 231.35. What did AMD do today? Let me see. I'm just going to pull over, you know what? I'm going to pull over Google and just say AMD stock, and this is for you, George. Let's see, AMD stock is range 241 high, to 232. So today, let me just show you guys, AMD traded right inside of that predicted candle. 241 with a high, 232.24 on the day. VantagePoint forecasted it again. Let me just point it out for you. A candle last night at 6:30, and AMD traded inside of that. So George, my friend, and anybody else that's looking at this and wondering how accurate this information is, let me ask you a question. And I want you to answer this question in the chat. I'm going to give you a second to do it. If VantagePoint forecasted AMD to trade in that range at 6:30 last night, and today, between market open and market close, it traded right within that range, would you find that information valuable on a day-to-day standpoint, right? If VantagePoint forecasted AMD to trade in that range at 6:30 last night, and today, good. So yes. Well, some George is saying, George asked for it. Anybody else in the room right now? Anybody else out there listening? Would it be valuable to have that information day in and day out? Because if you want to calm the market volatility and calm the chaos, giving you some very easy steps, and you don't need VantagePoint to do it. You can use these steps in whatever analysis you're doing, right? Do some sort of global market analysis. Obviously, it's much harder if you don't have AI like we do here, but do some sort of market analysis on sectors or other markets that might influence, right? Use indicators that provide analysis on the trend, on momentum, on strength, non-redundant indicators, and then create a repeatable process, a systematic approach that you can apply every time you look at a stock, and do that process over and over again. All right. If you can do that, those are 3 steps to help calm the chaos, calm the volatility, so that you can put yourself on the right side of the market more often. Right. Now here's Tesla. A lot of people have questions around Tesla, like, is it time to buy Tesla again? Well, VantagePoint is, look, it's red. Its shaded area is red. I can see in a quick second that I don't even need to look at any of the indicators if I'm wondering if it's the right time to buy Tesla, because VantagePoint is saying this shaded area is red, the blue line is below, Tesla's trend is still expected to go down, or a minimum sideways. So if I'm thinking about trying to buy a contract on Tesla, VantagePoint is saying, not yet, right? Pump the brakes, to use a car analogy. It's not time yet, and I don't have to overthink it, right? Here's another one. Let me see, NVIDIA. Here you go. People love NVIDIA. By the way, check out this NVIDIA trend. VantagePoint forecasted NVIDIA up, AI giant, and it was a huge trend. And then there was a great profit taking or a short opportunity right here in the middle. Back to a bullish trend with last night a new profit taking opportunity. There are literally, let me try that again. There are literally 3 trends on NVIDIA in the last 6 months forecasted with the AI. One bullish to the tune of 63%. Here's a bearish one to the tune of, let's see, where did it go? Let me see, I lost it. There you go. To the tune of 3.4%. And then another bullish one here, closing out today to the tune of 5.3%. That's 70+% hypothetical gains if you had taken those 3 trends right there in the last 6 months. Go look at your account. Do you have any positions that in 3 trends you were able to grab 73%? Because this is a monster mover, and VantagePoint forecasts were dead along the way. Can I short NVIDIA now is the question. We'll take a look. VantagePoint is indicating right here, I'm going to zoom in for you, right? Here's the cross to the downside. Here's the bearishness. We almost have a red crossover. Not quite yet. Don't try to outpredict the predictor. So VantagePoint is saying there's weakness. There's momentum pointing bearishly. We're expecting a lower high today. But we do not have the bearish crossover to say, all right, we got a total trend reversal. So how do I read that? And definitely not holding a long position, but also definitely not getting into a short position or buying puts just yet, because my indicator set, my primary indicator, is not saying, remember, wash, rinse, repeat. I don't have to make exceptions to the rules, because the rules and the process are what make the trading opportunities consistent. Don't break your rules just because you like a stock or you think things are going to fall. Again, this isn't advice. This is just from an education standpoint, 25 years in the market and working with thousands and thousands and thousands of traders. Don't break the rules. Use them to your advantage. And I don't have the total setup that I need just yet. in Nvidia for a bearish opportunity or buying some puts. Now, that doesn't mean I couldn't sell some covered calls, right? That doesn't mean I couldn't go out and do something, like selling positions to take advantage of that volatility or that delta neutral move. But as far as buying puts or taking a short, that's not something I'm looking at just yet. All right, what other questions do we have? Can identify some kind of warning before huge crashes like 2008? Hiroko, great question. I think the biggest crash that we can talk about was probably the COVID crash. VantagePoint indicated the COVID crash recently in February of 2020. February of 2020. So the answer to my question is yes. For those of you that don't know, this software has been working since 1991, using artificial intelligence the entire time. It is now dual patented. So not only has it seen market crashes, elections, wars, natural disasters, it's learned from all of that. Because if you don't know about artificial intelligence, and I'm sure you do by now, but if you don't know about it totally, the more data you push through it, the smarter it gets, the more trained it gets to do analysis. This software has been using market data for over 34 years, right? All these other companies out there that are claiming they're using AI or maybe are using AI, they've been using it for 5 years, 6 years. That's like having a 5-year-old manage your money. Would you rather have a 5-year-old manage your money or a 35-year-old that has been doing nothing but market analysis his entire life, helping you understand what's expected to happen? I know the answer for me. You gotta answer that question for yourself. I've got about 3 or 4 minutes left, so if you've got a question, pop it into the chat. I'd love to answer your questions. If I confused you in some way, shape, or form, or you want to see a certain ticker, I've probably got time enough for one ticker, but use the chat box, get involved. And by the way, if you're not already subscribed to the VantagePoint channel, do me a favor, go hit that subscribe button so you get notified of these lives. We do these lives every week in some way, shape, or form around the current market conditions, and you want to know when they're coming up. So make sure you subscribe to that channel. And plus, if you've got questions about VantagePoint and you like these forecasts, write this down. I'll say it slowly. We'll put it in the chat. VantagePointForecast.com. If you'd rather have your questions answered one-on-one, you can go to VantagePointForecast.com and work with somebody here on our team. Somebody said Google. Let's see, there it is. All right. George, you want Google too? TQQQ. I've got those open already. Here's Google. VantagePoint had a very nice trend on Google. As a matter of fact, last night it forecasted a little bit of bullishness, a potential trend reversal. As a matter of fact, it even said we could expect a higher low today and a higher high today on Google. We got all of that. We got a bullish forecast, and what this is saying is depending on support or resistance, Google has some bullishness expected in it. Now, when I say depending on support or resistance, let me show you something. Right up here, I'm going to drop a line right up here. Right here is a resistance point. As price gets close to that resistance point, it's going to slow down a little. It's going to pause a little bit. If you haven't done analysis using support and resistance, check out some of the videos on our live. I go into support and resistance in detail in some of our previous videos, and we'll do it again here soon. But what this means is I need some good volume and I need some good momentum to push past that potential resistance point, which looks to be a 52-week high. I'm going to check it right now with an indicator that does it. Yep, 256 is a 52-week high, and it's approaching that. So there's going to be some downward, some bearish pressure on Google. And what can help me understand whether or not that bearish pressure could be broken is I need increasing bullish volume and I need increasing bullish momentum at the same time that I have trend strength and trend direction that's bullish. So this is something to watch out for, something to keep an eye on. Right now, it looks like there's certainly some bullishness in Google, at least up to that resistance. But then when it gets up to that resistance, it's likely to pull back. I don't know what it did today, but for me, what I'm looking at here is that a point of resistance is 256. Google went up to 256.96 and pulled back today, George. I don't know if you saw that or not. So it went right up to what I'm talking about and pulled back. That doesn't mean it's not going to go up. It just means it's going to retest that point multiple times. And if it can break it, because of volume and momentum, we could see Google go higher. And that's something that we've got to keep an eye on. So good question. I appreciate that. There's some quick analysis for you. TQQQ, do I have... If you don't know what the TQQQ is, it is a triple leverage ETF that follows the Qs, and what it does is it gives you access to buy more shares based on the fact that it is a leveraged market. All right, if you're not, there it is, TQ. I knew I had it somewhere. What VantagePoint was indicating as of early this week from last week was that there was bearishness on TQQQ. It said that we could see a potential low today on this of $100.98, right? I think the TQ closed at 102. It went down to 99.75, so it almost nailed that low. It did nail that low today, and it did exactly what VantagePoint expected it to do. Is this a prolonged trend reversal? That's probably a question you have. Look, the shaded area is red, but the strength is bullish, and momentum is starting to build bullishly. So although we've got some major weakness in the TQQQ, it's not enough weakness to say this is a major trend reversal yet. What this is saying is consolidation. It's trading within a channel. That channel was set on Friday's big candle. And until it can break out from one of those support or resistance levels, until it can break out of that channel, we're expected to see some more consolidation, right? So some stocks are up, some stocks are down. The indices are channeling and consolidating, and that's why I love the artificial intelligence VantagePoint, because it can tell me the difference between what is what and what is going which direction or not, okay? We covered a lot today. Hopefully I didn't confuse anybody too much. You know, my goal in this session was to provide you some analysis using AI and give you some steps, a systematic approach to increase the likelihood, increase the confidence, increase your chance to make money in the markets, and hopefully I did that. If you enjoyed this session and you think we got some of that accomplished, let us know in the chat. As a VantagePoint organization, we are dedicated to helping as many traders as we can. If you're a VantagePoint family member, thank you for being part of the VantagePoint family. If you're not, come and join us. If you've got friends that you want to show this to, send it to them. Our goal is to help as many traders as we can around the world, and we're using artificial intelligence to do it. And I've enjoyed today's session, so let me stop there and just say one last thing. Thank you for being here, and thank you for letting me give you the view from my vantage point. Everybody have a fantastic day. Happy trading. I've enjoyed today's session, so let me stop there and just say one last thing. Thank you.